Are you a expat living overseas and wanting to invest in Australia, and or Australian property investor and wanting to know what's going on with global markets? This is the podcast for you. Hi, I'm Jarrad Krause. I'm the co-host of the Property Pals Australia podcast.
And I'm Sam Powell, the other co-host. And in this episode, we get to talk to Jarrad Brown. He's a financial planner based in Singapore, and a very experienced analyst. And he's got deep domain experience in understanding the expat trends, which also leads to global market trends. And we talked to him about what's going on in the international markets, because that is a leading indicator to, I guess, the confidence in Australia, and to help people obviously make that decision on whether to invest now into Australia or to wait a little bit.
Yeah, absolutely. We talk about migration in terms of living migration, like migration to live in Australia, skilled migration. We talk about interest rates. We talk about interest rates versus the cash rate. We talk about interest rates versus the currency that you're being paid in, and how that can affect your borrowing capacity as that fluctuates. We talk about different asset sizes within Australia, from sub 100 mil or 1.5 mil to up to 5 mil. There's so much value in this pod. Hey, Sam.
Oh, there's definitely a lot there, and more to come to. But as always, this isn't the only way we can help for free. So leave any comments if you have any questions below. And as always, head on over to propertypals.au/resources to check out our free downloadable on how to maximize your borrowing capacity to obviously help you achieve that greater asset. And we'll also leave some the links in the show notes for getting in contact with Jarrad. But enjoy, leave some comments and like and share, because this is the way we can share the love and get the word out there.
Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jarrad, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. Jarrad, welcome to the podcast. Thanks for coming on.
Thank you for having me. Great to be here.
Yes, I thought it would be a really good idea to get the big brain on campus. Jarrad Brown is sort of financial planner, qualified property investment advisor, mortgage broker, and I guess you've got your finger in the international world of finance, being based in Singapore. Is that right?
That's the one, yeah. So year 12 for us up here in Singapore now.
Year 12,
wow.
Geez.
Cool, congrats.
What I guess I get sort of like right into it, like with your journey, right? How did you get to where you are now? Like, you're a very educated man and very experienced. So can you sort of help people understand who you are and how you came to be?
Oh, sorry, guys. That just completely froze. I got, you're a very educated man, and then it cut right out. I heard absolutely nothing after that.
Jarrad,
just ask the question again, Sam.
Yeah.
It was fine on my end, yeah.
Well, just tell us a little bit about who you are and how you came to be 12 years in Singapore as a qualified financial planner, and also your background in broking and property as well.
Yeah, certainly. So look, originally from Perth, so I worked in the sort of personal finance space for a number of years in Perth, and then basically sat down with my then girlfriend, now wife, one day and thought, hey, wouldn't it be fun to go and work overseas? So then it was just a matter of kind of deciding on where. So I sat down with the mentor at the time and said, look, where would you go in the world of personal finance? And it was New York, Switzerland, Hong Kong, or Singapore. Now, whilst I have some finance-related qualifications, speaking other languages is not in my wheelhouse. My brain just does not work that way. So Hong Kong was off limits. So we decided Singapore. So, reflecting back, go and move to arguably the world's most expensive city to live with far too little money. And to be honest, if I looked at somebody in my financial position, living in Australia, saying, "Hey, I'm going to go and move to Singapore with no job, no income, really nothing lined up," I'd probably be telling them you've got rocks in your head. But yeah, I mean, as we look back 12 years later, I mean, it's been, fantastic journey, great place to live, great place to work. Yes, it's expensive, but yeah, it really is a lot of fun being here. And as you touched on, yeah, our client base is predominantly Australian expats. So Australians living in Singapore. I mean, we're operating with clients in 36 different countries now, but always that Australian connection.
Yeah. Now, the expats is a really interesting one. So can you give me a bit of a classification of expats for the people to understand?
Yeah, certainly. Look, lots of terminology with this one, and I always get some interesting comments online around, what is an expat and where did this term come from? And look, we won't dive too far into that one, but for us, it's really the Australians living and working abroad who are sort of planning to be abroad at least a couple of years generally. The average Aussie expat's kind of 2 to 3 years abroad, and then they'll usually move back to Australia. Other nationalities, like British, for example, usually will spend a bit longer abroad. And I think if you compare the lifestyle of the UK to Australia, you can kind of understand why. Just personal opinion, of course. But yeah, very much Australian sort of taking up jobs or starting businesses overseas is really our client base.
Yeah, well, Jarrad, you're an expat, mate, over there in Indonesia.
Technically, should selfishly ask some questions, Jarrad. So people like moving to different countries, do they kind of assess like setting up their company in the country that they're moving to versus Australia, or like when does it make sense to keep everything to their company in Australia and run it through Australia but live overseas?
Yeah, gosh, how long have you got? So, look, I mean, I guess some of our clients are pure PAYG, so they're progressing in their career, usually taking on a leadership position or moving up, and that's really the sort of non-financial, or I guess in some ways financial motivator to move abroad. The business side, really is how long is a piece of string?
Yeah.
Partly depends on where you're moving to, how the tax rates compare, how the regulatory framework compares, where your operations are. Are you really just running an Aussie business from overseas, and therefore it doesn't make a lot of sense to really sort of shift operations overseas? Is it more in the IT sort of tech space where you're kind of inventing something, where you really want all those capital gains to be actually taking place overseas? There's just so much to consider. But yeah, just such an important area. Speak with your lawyers, speak with your accountant, speak with your financial planner, because it really is a lot more than just, hey, go and set up a company, set up a bank account, and away you go.
Absolutely.
Which a lot of people think is the case.
Yeah, where I'm at Indonesia, I'll just speak to this quickly, is I've sort of looked into having an Indonesian company, and the tax, to save tax, I'm not really going to be saving that much tax by doing so, and it's going to be a lot of work. Basically, the first year I'll save a bit of tax, but then you've got to pay your accountant like a certain amount of percentage of what you earn, not just like a fixed fee per year to do your tax returns. You have to pay them a certain percentage, and then you have to pay, and that's per quarter. And then you also have to pay the government per quarter as well. And there's two different types of taxes versus my business is an Australian business. I work in Australia, make money in Australia. And the very good reason I want to mention that here on the podcast specifically is because it allows me to get finance in Australia to acquire property, which is far more valuable than saving money on tax, I believe. My opinion.
Don't disagree with you with that one at all. Yeah, I mean, you look at the Australian banks these days, and I mean, yeah, we sort of face this challenge even with lawyers who are partners in very large global law firms. But because of that ownership, the bank wants full financials of that law firm overseas. Well, yeah, guess what? That law firm isn't going to play ball with that one. So yeah, sometimes keeping things simple, having the opportunity to get finance, obviously grow your wealth through resi or commercial property back in Australia. I think there's a lot of value in that.
Yeah,
Sam, you've got some property questions to lean into. I'd love to.
Well, I guess to preface it too, I'm getting deeper and deeper, and I'm just a student in all the global, macro side of things, and that's where the migration trends is something that obviously you're dealing with expats, you're very familiar with, and I've got this thesis running through my head of the world's becoming more and more connected, and we spoke about this offline through technology. And I guess obviously I'm on property, but I've got no bias. I'm there to sort of help people, enhance their financial wealth, because that gives them options in the future. There's not just obviously Australian property, there's international, and there's also shares, and diversification is really key. So I'll preface that there. But my overarching thesis is, with Australia as a nation, like, we're a developed world, we're an island, nation that's got all natural resources, very self-sufficient, and a very attractive place to live, and a high income, right? So that's where it's like, the trend that I'm seeing is, people like Australia's population is really only increasing due to migration. So, and we're cherry picking through a lot of the, a highly educated sort of people coming through into Australia, and the skilled workforce. Like, is Australia in people's eyes a really attractive place to live, and how does it compare to, I guess, the rest of the world?
Yeah, God, very broad question there. I mean, Australia, I guess, sort of looking at that one from this region, and if we look at the sort of non-Australian population, I guess, in terms of what appeals about Australia, as you say, high sort of, wages, which is attractive to a lot of people, very strong regulatory framework, which is great, very safe, very sort of well-regarded, I think, in terms of the rules, the regulations of our systems in Australia. The wide open spaces, the lifestyle. Every second article seems to be about how we're trying to go from 5 days to 4 days a week. So for a lot of people, that's all heading in the right direction when you compare a lot of that to Asia. Obviously, the currency is quite stable. People look at the stock market, the property market, and, yes, obviously there's volatility, but different levels compared to, what we might see in particularly parts of Asia. So I think, broadly speaking, Australia remains very appealing. Property prices are still a lot cheaper than most of this region. You compare to Singapore, Hong Kong, Vietnam. I mean, again, there's obviously cheaper pockets, but if you look at the developed parts of Asia, even Sydney prices are comparatively cheaper.
Wow, that's interesting.
What I think is probably less appealing is the fact that, as you start paying tax in Australia, accumulating wealth in Australia as a PAYG employee, I think, is very unattractive. And I think that's probably where we drop the ball a little bit. So it's great to accumulate wealth overseas and then shift to Australia. And whether you're investing steadily over time through super, through property, through shares in Australian dollars, that's a really common strategy. And I think it'll continue to become more and more common unless Australia really fixes its tax framework.
So is that the main reason why it's harder to accumulate wealth in Australia versus, say, other countries, because of tax in Australia? And
I mean, obviously we have cost of living, but I mean, cost of living as I sit here in Singapore is certainly not cheap either. But, as things rise, if your net effective tax rate is, say, 17, 18%, I mean, it's 24 above $1 million. But if your net effective rate is 20% and your rent goes up by 5%, you can kind of manage that with other expenses because, you're only losing 18, 20 to tax. Whereas in Australia, your rent goes up 5, 10% and you're already losing 47 in tax, and your PAYG, and you're getting hit with Division 293, and you can't shift your income through a trust or through a company because you're not running your own business. I think it is definitely a lot more difficult in Australia. Certainly not impossible. You need to look at different strategies, but definitely a lot more challenging than living and working abroad.
Don't want to get too political here, but why do you think we have such a high tax bracket compared to the rest of the world?
Gosh, good question. I mean, there are some very, I guess, relatively attractive parts about the Australian tax framework, and I think changing them to plug the gap, if we really made ourselves competitive on personal income and even corporate tax rates, would be quite a tough pill to swallow. So, things like the main residence exemption, start taxing people on their own home. Well, whoever does that, and again, keeping this apolitical, is probably not going to get voted back in, right? Or, take GST from 10% to 20%. Also very, unattractive, but it makes it a lot more about consumption. And then bring our personal income tax rates down to 20, 25%. And then the Australians, the migrants earning 200, 300, 500 a year will probably very happily stay for financial and non-financial reasons. Purely my opinion, of course.
That's all I want, mate. Go, Jarrad.
Say it's the other way around. Say you do have expats outside of Australia that want to invest into property back into Australia. What are some of the common questions or concerns that people should be having?
Yeah, it's a good question. So on the concerns with investing in property, this is really where a little bit of information becomes a very dangerous thing. And my industry in the offshore space is largely to blame, because you get a lot of sort of financial advisors who are specialists in the expat space, or accountants, or maybe somebody trying to sell them property in the UK. So naturally, Australian property is unattractive because you've got to pay tax, and there was some removal of some main residence exemption, and these little tidbits of information without considering the whole picture is where people sort of run themselves into big problems, and either expensive tax bills because they sold unnecessarily, or they haven't sort of managed to minimize tax, or they just haven't done anything because they're too scared. So I think the first thing is really getting a good sense of how the taxes actually apply and how you can kind of minimize that going forward, because it really doesn't need to be that onerous or that costly as an expat. The whole main residence exemption, yes, the removal of that is or has been painful. So you can't sell your ex-main residence as an expat anymore. You don't get that exemption, and that tax applies from purchase price. All right, well, that's pretty draconian. You bought a place in Sydney for 1 and you moved out when it was 3 and now it's 8. Yeah, that's going to be a pretty hefty tax bill. But on the investment side, not a great deal has changed. We don't get the 50% discount, sure, but generating, compounded leveraged growth when we look at residential property is still pretty hard to replicate in stocks or other asset classes. So, tax is probably one of the big ones. Then, of course, it's, well, what do I buy? Where do I buy? How do I structure the ownership? That, of course, is, where guys like yourselves come in, and professional property buyers who can advise on, all right, well, what is it? Where is it? Why? How do we actually track if that's a good investment? Am I looking for yield? Am I looking for capital growth? What do I actually need? What aligns to my goals? And a lot of the time it's, questionable developers trying to sell some project that's, so far from any capital city that there'll never be any capital growth. So, then we also get kind of those rumors or, bad experiences that some have as well.
Yeah, the house and land package with the rental guarantees. Beware of those ones. From because we have a couple of we have quite a few listeners actually, and a few downloads, like in UK and in America, and my assumptions that obviously Australians that have moved over there, where are the complications? Like, people, they know, like, and trust Australia. And I've got clients too that they live overseas and they're coming through to invest in Australia because they can see themselves coming back into Australia in a few years. If they've got, say, employment over in the UK or the US, like, how does that work with using leverage and borrowing capacity?
Look, leverage for expats and actually borrowing is probably a lot easier than most people realise. So of the, give or take, 50-odd lenders that most Aussie residents will have access to, at any one time, you've probably got 10 to 15 that will lend to Australian expats. So, your citizens, your permanent residents living abroad, and that'll apply to most developed countries. Now, if you're working in, Madagascar, earning, a currency that, is not gold or silver in the eyes of the bank, that's, of course, going to be challenging. But when we look at where most Aussies are, Singapore, Hong Kong, UK, US, Canada, a lot of the major lenders and even second and third tier lenders will still lend. You can still go up to your 80%. You're not paying a premium because you're an expat. You do need to know how those lenders are going to treat your income. So, a lot of expats, especially if they work in tech, you'll receive a lot of shares as part of your remuneration. Now, not all lenders like that, and not all lenders are going to accept that. So that's probably where the brokers come in, who can guide you and say, well, look, go to bank ABC because they accept bonus income in the form of shares, or go to bank, XYZ, because, they'll accept your foreign income and they'll accept your net income there, as opposed to applying Aussie tax rates. So I think it's definitely still possible from a lending standpoint.
So can you borrow based off share allocations? Like you say, they got bonuses in shares and they account to X dollars. It has to be a publicly listed company. It can't be like
Yeah, typically a publicly listed company with the shares, and they'll usually want to see a few years. So this is really where the discretion of the credit assessor comes in. So, usually you're going to be your sort of S&P 500 type companies if they're in the US, or working, Singapore, Hong Kong for similar sort of companies. So, publicly listed, definitely large enough. Again, the bank's typically going to want to see that so that they've got a bit of faith in the stability of the share price, because otherwise they're going to need to carve off, such a buffer, and those shares aren't really going to be worth a great deal at all in the eyes of the bank.
And would dividends be same as basically personal income?
So again, dividends can be a little bit different in the eyes of the bank. So depending on the consistency of those dividends, how much variation year on year, is it coming from your own company? Is it coming from your employer? Because obviously if it's your own company and you're deemed to be self-employed, then that's going to throw another challenge up with the banks, and not all Aussie banks or Aussie lenders will lend to self-employed Australian expats. So again, that throws up another challenge people need to be aware of.
Mate, I imagine there's always case by case. It sounds like there's a lot of challenges, and what I find in the world is the biggest challenge is trying to find the right people to talk to.
Absolutely.
Hence why I'm talking to you.
Thank you, mate. Look, I mean, I think it's just so important. I mean, guys like yourself and others, in the industry of personal finance, let's call it, just actually spreading what is hopefully valuable information and valuable content, so people know not just who to go to, but how to, kind of read through the crap and know what questions to ask, and when the radar should be going off, and what's going to cause problems later on, or, what is the advisor, not telling them, or, where could those sort of pitfalls be?
Yeah. Well, going back to, I mean, as I said to you before we came on, that we like to jump around a little bit here, but I definitely want to come back to, I guess, the migration trends as well. So, like, into Australia, where obviously it is an attractive place to live. Is there an increase in flow coming into Australia on a percentage basis, or is it like, do you sort of track that data? Can you give me a bit of insight around that?
Yeah, look, we do track it from a fairly broad sense in terms of who's coming in. Are those numbers actually increasing, decreasing? Why? What's really pushing that? I mean, I think when COVID hit, obviously, Melbourne was impacted, as we all know. Melbourne's very widely regarded, particularly in this region, as our sort of educational excellence state or city. Now, I think to the benefit of Australia, England, Canada probably didn't do their best work in maintaining relationships or building relationships with China. So I think Melbourne really benefited as all of those international students came back. So obviously universities benefited. Obviously there's some hoops they've got to jump through with the state governments around building accommodation for those international students coming in. But Australia being recognised as a very high quality of education, very much remains. Again, house prices still relatively stable, still quite affordable. The low Aussie dollar, is still incredibly attractive. And people get very caught up, particularly, expats or foreigners looking to move to Australia. The Aussie dollar was 125 or it was 120 against the Sing, and now it's only 115. I'm going to wait for 120 or some other arbitrary figure, not really appreciating that the exchange rate doesn't actually owe you anything. And when I moved, we were about 80 cents to the dollar. So a lot can change in a very short period of time. But when we're at these sort of exchange rates, the Aussie dollar is quite low. Again, that's going to lead to a big influx of people. So if you're coming in buying a $2, $3, $5, $10 million home, and you're getting that for 20, 25, 30% cheaper than it was 5 years ago, that's pretty appealing, even with a pretty high tax rate. So yeah, the whole trend from this region, Singapore, obviously Australia is still very attractive, India, Nepal, China, Hong Kong, again, that movement to Australia continues. And even though the tax rates are not sort of improving to a great extent, I think those other variables still remain very attractive.
Yeah.
That's awesome. What about like workforce, like skilled migrants?
Yeah, look, skilled, unskilled migrants. Obviously, Australia goes through various changes with immigration, significant investor visas, and various other things. And I'm certainly not an immigration lawyer, so I'll touch on that fairly broadly. But as this does continue to change, again, we hear different experiences from different people. Sometimes they go through fairly quickly, and maybe part of that is down to the team, the businesses they're engaging to actually support that migration. And sometimes, you read the headline of how desperate we are for nurses, and then we've got nurses in the UK waiting 2-3 years to get visas approved. So, it is very mixed. But again, that demand still seems to be unbelievably strong. And I think Australia is one of those lucky countries, a little bit like Singapore, where you open the door and everybody's trying to force their way in. Whereas maybe we'll name Malaysia, as I sit here in Singapore, more a country you open the door, everyone's trying to get out. And that
that's where we
remains very true with Australia.
That's another thing that you mentioned too. Obviously, the currency side of things didn't even sort of spark my mind until now, and because I've been watching the Australian dollar against the US, and it's definitely been on a downward trend. Is it bottoming? Is it starting to bottom out? Like you see, obviously, what's going on in America, they're increasing interest rates, and to each their own, their opinion how far they'll go. But I do remember the time Jarrad and I was snowboarding over in Park City in Utah, and it was $1 for dollar basically. And but
I think it was even better, to be honest. That was in 2011.
Yeah, and then my mind's sitting there going, are people looking at that going, there's a trade in that? Like I'm looking at it going, well, is it a buy? Is it a buy of the Aussie dollar against the US? Like obviously it hasn't hit that bottom, but even for those clients of yours that are looking to, I guess, into Australia as a financial opportunity, are they bringing that up in conversation?
Definitely, yeah. And I mean, especially those that really get it. Maybe they've been an expat for a while, maybe they work in the industry, maybe they're working with their advisor. Trying to pick the bottom is a bit of a fool's game. You'll pick a moment, and in 5 years' time, you'll know whether you got the bottom or not. But it really doesn't actually matter. I mean, if we look at the last few years, and even personally, I've been sending money back from Singapore to Australia at 115 and then 120 and then 125. And we had a few seconds where it was 126. I didn't get any of that. And I really couldn't care less because, anything around these levels is very, very attractive. Do I wish I'd sent all of my money back at 126? Yeah, of course. I also wish I bought that beachfront property in Sydney before I was born. Some of these things are just ridiculous. And so I think we just need to be aware of, if we are, especially Aussie expats or those looking to move to Australia, so not just from an investment sense, but if you're looking to be back in Australia one day, then whether it's 114, 115, 112 to the Sing, 65, 68, 70 to the US, these rates are very attractive. I think again, dust off the crystal ball with interest rates. Everyone knows they will head down. Nobody knows how quickly. I think the RBA has probably been very slow to the party this time. Again, just personal opinion. I think they're very late to the party in cutting rates. But again, we'll see what transpires next year. But rates are going to continue to trend down. But inflation is, we didn't go up as fast as the US. We didn't come down as fast as the US. And they will continue to cut rates probably more aggressively than the RBA will. So there is every chance that the Aussie dollar probably has bottomed, and we may very well be trading 70 to 75 next year. We may be trading $1.05, $1.10 Sing dollar next year. Again, take these figures all with a pinch of salt. I just think the rates are very attractive now. And I think if you are an Australian expat looking at when is the right time to buy the future home or top up the offset or pay down the debt or top up the super or buy some shares, then you'd probably be a bit of a fool not to be at least looking at things now.
When you hit the interest rate side of things, I mean, if you zoom out on the cash rate, Australian cash rate anyway, there is a really strong downward trend, over the last couple of decades. And then my mind also links to it. Well, are we heading to 0% interest rates? Like, if we maintain this trend, or is it like? What are your thoughts on that comment?
Yeah, look, I mean, I think the reality is, the COVID rates were lovely. We all enjoyed them. We all had the, fixed rates at the 2s, or, some of us in the 1s for a little while there, which was great. But I mean, I think the reality going forward is, particularly in Australia, if we look at mortgage rates anyway, we're probably going to hover somewhere between maybe low 4s to 5, give or take, over the next few years. If you sort of remove those volatile periods in the 80s that everyone likes to talk about, and the whole debate online around the 17% and blah blah blah, and how everyone had to fork out even though property prices were only like 2 to 3 times annual incomes. We won't go into that, but if you remove that volatile period, long-term rates sort of sit at around that 4.5-5% anyway. So we're a bit above now. I don't think people should be banking that we're going to go back to 1s and 2s. I think it was lovely while we were there. The RBA had access, or provided access rather, to emergency funding for the banks. But barring some, international emergency, we'd be running those numbers in the 4s and even 5s.
Yeah, that makes complete sense to me. Like, everyone's always wondering. Like, you look at the RBA rate tracker, there's a website there. People that are listening, they're definitely the trend is in to be cutting. But it is quite interesting on the global macro scale to sort of understand these things, because what people lack is the zooming out, and the clients I deal with, it's all very short-term focused. And even in their investing, it's like they want to buy in hotspots, and I track data all around Australia, and it's like, well, yes, you'll get that good sugar hit in the next 1 or 2 years, but property is a long-term, medium to long-term game these days. So I'm giving more and more confidence to these people to understand the macro side of it. But a lot of it, I mean, it's not the most interesting topic to some people, so it can be challenging. I guess, the question that I had in my mind when you were talking was, like, with interest rates obviously going down, or perceived to go down, and then I guess people's buying activity as well. Like, I guess I'm cautious of the future. And do you feel that with interest cutting, there'll be an increase in market activity, or is it like, what are you sort of seeing on your financial planning side of things? Like, are people looking for rates to get that breather because they've been under pressure?
Yeah, look, it's a tough one. I mean, there's so many sort of competing variables when you look at how all of this plays out. I mean, interest rates coming down, yes, will provide a lot of people with a breather. I mean, I think a lot of people were hoping that we we being Australia, the colloquial we, cut rates a lot faster than is forecast. We look at rate forecasts in the US, it was going to be March, and then May, and then November, and now it's, all right, we've got one now. Australia's been a similar sort of story. So I think a lot of people are kind of feeling the pinch. And you look at the number of people who've sort of sold properties at a loss that they bought, only a short period ago, maybe sort of bit off a bit more than they could chew. So it's definitely people waiting for that. But if you look at the expat population, what does that rate cut do to the currency? And therefore, what does that actually do to their borrowing power?
Yeah.
Because if that exchange rate changes and now all of a sudden, I'm earning Sing dollars or US dollars or euros or GBP, whatever it might be, if that now translates to less in Aussie dollars, even though rates have come down, the RBA, we might even see the serviceability buffer come down from 3 to maybe 2.5%, which will be great. But is that actually going to allow me to borrow much more? I think that's really, and I don't know what the answer is, because that really depends on what exchange rates do. But I think people need to be very mindful, amongst the expat community, of the fact that a simple rate cut is not just going to translate to, 1% rate cut, I can borrow 20% more. Because if the exchange rates really go against you, then, that might actually not be quite that rosy.
Mm.
But I mean, coming back to, I guess your actual question in short, will decrease in rates lead to higher sort of buying activity? Absolutely. I think that has to happen. A lot of people, and I mean, if we look at our sort of expat community, even our Australian resident clients who've been waiting, to renovate or to buy or to upgrade or downgrade or buy, the expats buying the future home. Yeah, a lot of people are waiting on that, that interest rate to come down, because then instead of borrowing 900, they can borrow 1.1, hopefully.
It's a funny thing though, right? Like the waiting, because then you've got the market moving as well in a positive direction, and it can sort of outweigh it. It's like, is it really worth waiting or not? But if it depends on who we're talking about and what asset they're trying to buy. Like if they're trying to buy like a home, they've got these parameters that are emotional parameters of what it needs to be and look like, versus if it's just an investment, why not buy now, right?
Yeah, absolutely. And I mean, I think the other interesting thing that we'll all sort of see play out over the next couple of years is, obviously, if you look at, I mean, Perth being a great example where we've seen sort of explosive growth over the last 2 years. And, who knows whether that continue. Obviously, time will tell. But the majority of that has sort of been in your sub $1.5 million price bracket. So, not to suggest that's the cheaper end of housing, but it's been the lower end, across most of the country. And we haven't seen that same explosive growth in your sort of 2s, 3s, 5s plus. So, as rates come down and people's borrowing capacity can increase, do we start to see those people in the $3, $4, $5 million homes who are trying to upgrade or downgrade or buy the future home, whatever it may be? Do we see that activity shift in terms of the price bracket? And again, you guys probably know better than I as to how that plays out, but I think it's just an interesting one to watch.
Very interesting, and a very good thing to ponder and question, because it's a question for somebody that has maybe a $2 to $3 million home and they want to do a bit of a renovation on it. What sort of ROI are they going to get from the renovation if they're looking at it in terms of ROI wise versus just like emotional decisions of, I want my home to be like this.
Well,
what are your thoughts on that, Sam?
My mind comes to like that purchase belt is, you're probably looking at more like business owners, right? Like going into that 2, 3, 5. So it's like, it's around the business cycle and the confidence. I guess that's been somewhat, there's definitely some, and Jarrad, you'll be able to indicate to me better than my thought process, but this year's been, it's election year in America. There's been a little bit of what's going on. You see there's a lot of like, I'll sit on my hands and wait because the confidence seems to be low. If we get a cut in interest rates, that's sort of stimulatory, which might give that business cycle that boost to go and push further in because they're more confident to go and take that $2 million loan out to buy that dream property. So I feel like, you made a really good point. Maybe that is that next wave coming through, because the investors, or like the lower purchase price, a lot of that's been driven by like the lack of supply, and then the demand level coming through, and then you lock down the world. That lockdowns our logistics centres. So even materials, and then our trade issue has been a big sort of fun there. And now you're seeing the government in this stage of the economic cycle, I imagine, where they're stimulating the lower first home miners again, and that pushes prices up. And I've seen the trends occur where they stimulate the low, and then it gets pushed over the years into the higher end. And I definitely know that there is a lot of not a lot, but there's more transactions in that sort of like 5 mil plus going on at the moment. It goes even deeper into another thesis I've got, which probably is like the erosion of the middle class is something that I've been monitoring, where the wealthy are getting wealthier, and maybe the lower class. There's so many distractions, mate, with Netflix and their phone that there's no motivation to go out there. And then my wife, she works with NDIS clients, and some of these clients, there's no motivation. They just get paid to sort of stay at home, and it's an interesting world. What's actually happening? I don't know about your thoughts on that. Like, is there a bigger shift happening on a global scale that most of us aren't aware of? Do you ever think about that?
Great question. Yeah, that the wealth gap is the middle class disappearing. I mean, it sort of reminds me a lot of the movies from the 90s where the sort of futuristic movies where the rich live in these divided estates and never even have to actually look at what's happening outside. And you look at some countries and you sort of think, gosh, you can just sort of see the early signs of a lot of that playing out. And I mean, if you've got the $5, $8, $10 million home, I mean, look at Australia as a great example. No inheritance tax. You pass that down, that $10 million home's now the $20 million home. And, you can very quickly see these things continue to compound compared to, your average Aussie expat couple, Australian resident couple who, might be earning a combined household income of 100, 150. It gets very challenging to really sort of accumulate wealth in an environment where cost of living is high. Obviously, Australia has a huge tall poppy syndrome issue, which we don't need to go into great detail on this podcast, and one of many reasons that Aussie expats love staying out of the country. But it's very challenging, I think, to really break through.
Yeah. I'm a bit hogging the mic a bit, Jarrad, so mate, jump in with you one. I've got a couple, like two questions. First is going to be around with the interest rate cuts coming through. That's obviously stimulatory for the Australian population, right? But it's also a sign of economic weakness from an economic standpoint to have to stimulate. How does that sort of go from the expats? If they're cutting interest rates, then and trying to stimulate the economy, our dollar, does that weaken the Australian dollar, or because America is cutting too, and that's a bigger nation, and they're cutting harder and faster? Does that sort of what are your thoughts there?
Yeah, look, again, dusting off the crystal ball a little bit. I mean, you look at again inflation alone and central bank activity. Yeah, it is all down to that sort of comparison in central bank behaviour and central bank decisions. If the Federal Reserve cuts harder and faster compared to the RBA, and our inflation drops much slower, then technically speaking, the Aussie dollar should strengthen against the US dollar. All things being equal, and inside a vacuum, and all those other disclaimers that back to macroeconomic university days. But I mean, the Aussie dollar should strengthen a little further from here, unless inflation falls through the floor, or immigration completely dries up, or international students stop moving in, or something really drastic takes place to really destroy our inflation data, our economic growth, and then we'd have to see rates cut a lot more aggressively, rather than just back to what I would call sort of normal levels, where they're neither stimulatory or actually trying to contract or reduce economic activity.
Yeah, with I wanted to ask around what you advise on for expats, Australian expats living in those countries that we mentioned, UK, Canada, and all that sort of stuff. When they come to you and they're wanting to invest, where does the Australian property market sit against the percentage of people that are interested in investing into the Australian property market, being an expat, versus investing in, say, crypto or stocks in other countries and or other sort of assets? Where does that sit?
Look, it varies. It does vary quite a bit in terms of how much demand there is for Australian property, partly on who they're working for, what their experience has been, who they're married to, if they're married to an Australian or they're married to somebody from elsewhere. That may drive a bit of the decision making around where they plan to be long term. So and also depending on what markets have done recently. The whole crypto wave, it went up, went down, went up, went down, went sideways, and that kind of drove how many conversations we were having with people. But for the most part, people realise that it's not something you should be really planning your retirement around. And I'm very happy to be on the record saying that we would never advise that any client had more than, say, sort of 5% of their balance sheet in assets like that. private equity, whiskey, cars, crypto. Whilst there may be great upside there and it might be personally enjoyable, I wouldn't be banking my retirement on that. So then outside of that, if they're working for, say, US tech, they might have a bit of a bent towards, US shares, which have obviously done exceptionally well over the last 2 decades.
Yeah.
So, then you compare that to the Australian stock market or Europe, UK, wherever it might be, even Australian residential property over that same time period. And they look at the growth and say, well, I'm just going to put it all in US shares, which again, as we all know, when it comes to diversification and, compounding returns over time is not the right thing to do.
Right.
So I think once people sort of learn, understand how these, markets will play out over time, if they do plan to be in Australia in future, then resi property definitely is in demand there. It definitely has a role to play when we look at demand from our clients. It's just often not the only, sort of string to the bow. If they're living in a place like Hong Kong, Singapore, Dubai, for example, where there is no capital gains tax on shares, on ETFs, on funds. Again, that's always a very attractive variable. Doesn't mean to say that's better than property. We would typically recommend both. But, when people look at residential property, they say, well, I've got to pay 30% tax or 45% tax if I sell it and make all this money. So, well, just don't sell it. That's a pretty easy solution. But, again, when they're just comparing that one variable to the other, sometimes, they can sort of get led down a single path that might not be quite right for them.
I got my other question was just around, like, you hit on a really good point, because the income to debt ratio in Australia from, I guess, the rest of the world is quite high, and a lot of people talk about outside of Australia how irrational it is. But you did mention just Hong Kong, Singapore. That's greater than Australia. Is that, like, can you talk to me a little bit further about that? Like, because people obviously say, "Oh, the Australian market's going to crash because it's it doesn't make any sense," and potentially. But what's your opinion on that? Is it at a point where it's unsustainable with where it is, or is it just like, is there more confidence that it's where it needs to be right now?
Look, my opinion only, of course, but I mean, this whole idea that the Aussie market is going to crash because our debt levels are too high relative to income, I think, is just complete nonsense. You ask anyone who's been for a loan application just what that experience was like, and it's just, how long have you got? Because they've got lots of complaints.
Yeah,
and it's like, people need to realise that's actually a hugely positive thing. Our banking system is incredibly tightly regulated, scrutinised. And, we don't go over the top with lending. We don't have 30-year fixed rate mortgages. And I mean, maybe that's a separate issue for another day. But, because of all these rules and regulations, the hoops you've got to jump through to borrow, the checks the credit assessors are going to ask for, I just cannot see how the Australian property market collapses based on debt levels. Yes, they continue to rise. But, what is our resi properties? About 11 trillion. Our debt levels are nowhere near that. I mean, we're not even at half of that. So, yes, while I think mortgage stress is a bit higher, than it has been a few years ago, again, I just cannot see how that really pushes people out. Maybe we transition into, more like Singapore, Hong Kong, New York, Europe, where today's, younger generation, maybe my daughter will rent. You just won't buy a property anymore if you're in Sydney, Melbourne, maybe the other capital cities. I don't really think that's a big deal. You just need to learn how the other asset classes work.
Yeah, just rent best it.
Just rent it. Correct, yeah. You just change tax. So, it's a bit unfortunate, and, we all see the headlines. It's challenging to get into the property market and blah, blah, blah. But, at the end of the day, maybe this is just the shift. And maybe this is the generation that is the last generation to really buy, unless they've got the parents or the grandparents or the wealthy aunts and uncles who are kind of doing it for them.
The bank of mum and dad, as they say.
The bank of mum and dad, yeah. Don't even get me started. Um,
Oh, come on, man! I just love getting your crystal ball out and dusting that one off for the listeners. But I guess pulling that one back out. Where do you see? I guess the next 12 months, 24 months from an international scale. Like I'm tracking. Obviously, Australia is influenced by America and UK, from what I can understand. The elections coming up this weekend in America, and everyone's sort of looking for an answer to get that confidence to go to next. Are you seeing positive signs, neutral signs, or a bit of caution for the next 12 to 24 months?
Look, I mean, I think I'd probably, I guess, in short, I'd suggest we're cautiously optimistic. I mean, whichever way the US election goes, and I'll keep my comments very high level there. Whatever the outcome, it will be inflationary. Now, it'll be a lot more inflationary on one side of the fence than it will the other, but either way, it's going to be inflationary. So, rates are probably not going to whipsaw right down as quickly as some might be hoping for, but rates will still come down. Earnings, if we look at US tech as a great example, which drives a huge amount of confidence in global equity markets. A lot of those large tech players are still beating earnings forecasts, share price forecasts are being upgraded by analysts. And whilst I'm not suggesting you should go and put all your money in US tech, obviously, but as long as that happens, that optimism will remain. Interest rates will continue to come down. Australia, US, UK, Canada, most of the developed world. That will obviously drive borrowing activity. Yes, I think unemployment probably has a bit to rise. And whilst it might sound a horrible thing to say, I actually think that's a good thing. That does need to level out a bit more. We do need to actually ensure business owners can survive, ensure there isn't unnecessary wage pressure. Cost of running your business, I think, has been really challenging for a lot of business owners over the last few years. So I definitely think we do need to see those things settle down. But yeah, broadly speaking, as we head into that sort of rate decline, economic growth will be a bit lower. Unemployment will be a bit higher. So the macro data isn't going to be as positive as it has been. But I think there's huge opportunities for investors right across the globe, and obviously for the Aussie expat community looking at Australia, while the Aussie dollar is where it is, and even if it's 5 or 10% away from where we are now, I think there's tremendous opportunities there, depending on what you're looking to do.
Love it. What a way to wrap it up, Jarrad. Thank you so much for coming on. Where can we send people to find out more about what you're up to?
Wonderful. Look, probably check out the YouTube channel. It's probably the easiest place to start. Until you get sick of hearing me, then you can reach out and have a call. But it's at Australian Expat Finance. There's a ton of information there. Hopefully sort of dispels some of the crap that's out there. Just little tidbits of information. So yeah, that's probably the easiest place to start. Really appreciate you guys having me on. It's been a lot of fun.
No, it's been good to have you, mate. And I guess, as I said at the start, it is. And I'll harp on this. It's there's good, there's great, and there's rubbish in every industry, and it's just trying to find the great ones to help people through their journey. Because I think we've gone from the age of lack of information to now too much information, and people are trying to weed their way through it. So definitely reach out to Jarrad and his team and check out the podcast. And mate, hopefully we'll get to talk again soon.
Wonderful. Thank you both very much.